With the holidays now firmly in the rearview mirror, the investment mood is tracking the drawing in of the evenings as autumn begins. Well, after 2 years of rising interest rates, the big question is whether or not the United States can avoid a recession. Well, equity markets across the world traded down last week. Two major economic indicators for the US that were released show that the US economy may contract sooner and stronger than expected. In fact, many investors are nervous that the decision by the US Federal Reserve on interest rates is too late and is behind the cycle. It's also feared that even if the US lowers rates over 2 weeks, it will have a limited effect on its economy that moves towards lower growth and higher unemployment. We have with us Jayant Krishna joining us, who needs no introduction. Thank you so much, sir, for making time for us. Would you argue that the United States could easily be tumbling towards a major recession after the job market indicators point towards unemployment, even though the rate of it had dipped in recent weeks?
So, yeah, I would feel that, many economists have said that the US economy may contract sooner and perhaps to a greater degree than what it was forecast a few months ago. If you look at some of the recent indicators, the growth has lowered, the unemployment rate is higher. There has been a real contraction in the manufacturing sector. In July, it contracted by about 0.3%. And for 20th time in the last 21 years, the manufacturing sector has contracted, So these are surely not good trends at all. But, they're mixed signals because if you look at the US average hourly earnings, that last month went up. New jobs did get created. The expectation was that about 160,000 jobs will get created. That didn't happen, but about 142,000 jobs did get created. If you look at, I was reading Barclays economist view, and and they say that the economy may not go for a recession as bad as people are forecasting. So there is an uncertainty, which is not good for the stock markets, and no wonder if you look at last week, overall. The S&P 500 contracted by about 4%, NASDAQ fell by about 6% a week as a whole, and Dow Jones Industrial Index also shrunk by almost 3%. So I think this is it's a mixed bag, and with U.S. elections happening, the uncertainty continues and it only mounts up. Right. So I think and taking looking at what has happened in the U.S. equity markets worldwide traded downwards. Last week, let's see what's in store this week. But things don't look as promising as one would have expected.
Yes, some people argue that it's not all rosy, but then on the other hand, you have some arguing that the US economy is actually cruising towards a soft landing with no recession on the table. But sir, what's your assessment? How has the uncertainty in US equity markets actually influenced global markets?
So, one is the fact is our supply chains, our trade linkages all over the world. What happens in the largest economy in the world does affect other economies because the supply chain, linkages because of export imports, But the fact is, as a standalone, if you look at some of the major economies, look at UK. UK's economy has not been doing well in Rishi Sunak's days also. And if you look at now with the new Labour Party-led government, their projection of a gloomy economy continues. In fact, they have said, be prepared for the worst. Germany, if you look at the recession which had hit their economy last year, it continues. In fact, the overall EU growth rate that one is talking about in 2024 is as low as 1%. And a recent report by EU, which was chaired by the former Italian premier. It talks about EU facing some kind of a existential crisis. And they have talked about EU as a whole, as an economic entity, have to talk about have to thrash out and formulate a strategy to fight. Not fight, but how do you grow? How do you keep EU relevant vis-a-vis China and US economies, and unless big time investments flow in, things may not look good elsewhere. China, if you look at their growth rate, had the overall economy's growth rate had shrunk. It is still not that bad, with about 4.6% to 5% projection for 2024. all markets, in Tokyo, Hong Kong, the Asian markets, Shanghai, Seoul, they all showed a downward trend last week. Even Sydney in Australia fell. So I think these are, India perhaps remains the only bright spot, but the fact is, even our economy, our GDP didn't grow as much as it grew, and in vis-a-vis the projection it was there for July figures which are out. So I think actually for the Q1 figures, which are out. So I think it's a mixed bag, and partly the market's not doing well, and the downfall that you saw last week is attributable to the US shrinkage of the stock markets, and largely because many of these economies not doing as well. So it is a cumulative effect of both the things, I would believe.
Well, it's always a pleasure to chat with you, sir. Thank you so much for joining us on the World 24/7 with your assessment.